The idea that Bitcoin doesn't need DeFi misunderstands how value accrues to a monetary asset. I think that's what's missing.
I like, DeFi, but I'm not interested in those things. I want my money to be secure, transactable, censorship resistant, permissionless, all those properties.
There's usually conversations already taking place around Bitcoin or gold, but there's one that I don't feel like many people are having around Bitcoin specifically, because it stands for so many different things for different people that, it's no longer just a currency. It's this battleground of ideas. Is it money? Is it rails? Do we need to do something to it to continue to improve it? Is it fine just the way it is? So on this episode today, we've got a lot of sharp minds with slightly different perspectives. And the whole purpose of this discussion is just to learn from each other. So I'd like to introduce you all to Matt. He's the CEO of Arch Network. We also have Vijay, who is the author of Principles of Bitcoin. And also Mike with Deep Ventures, where Bitcoin is at the heart of their thesis. So I'm sure that introduction doesn't really do justice. So I'd love to go around and kind of get a more detailed introduction from all of you, starting with you, Vijay.
Yeah, so I'm a lawyer, attorney in the US and also a solicitor in the UK. I spent most of my career, I started in a law firm. I worked on stuff during the Lehman bankruptcy, 2000. I'm pre-2008 lawyer. I was an attorney on Wall Street during the 2008 financial crisis. Then I moved to Goldman. I spent most of my career, about 11 years at Goldman Sachs in New York, and then Hong Kong, and then Singapore. And then along the way, I started going down the Bitcoin rabbit hole, and So currently, I'm international general counsel at Gemini, the crypto firm founded by the Winklevoss twins, and so that's my day job.
Thanks so much, Vijay. Matt, how about yourself?
Yeah, so my history in crypto dates back to 2012-ish. I was mining Bitcoin in my college dorm room at Florida State University. I had a couple of friends that put me onto Bitcoin early on, and I just wanted to become as familiar and as expert as I could on it. Of course, that led me to various crypto cycles throughout the last 10, 11 years, dating back to the ICO bubble, and then going into 2020 DeFi summer and NFTs and all that craziness. But in between those cycles, I've always been a serial entrepreneur, starting a few different consumer application businesses and consumer product businesses, which I've exited, and never really had a chance to start a business in this crypto industry that I've had so much passion for over the last decade and a half. So when the ordinals boom came around in 2023, the design space on Bitcoin started opening up. It really spoke to me as a amazing opportunity, a generational opportunity to start building on Bitcoin and apply my entrepreneurial skill sets and experience to the industry that I have the most passion for, which is crypto.
What about you, Mike?
Yeah. Hey, everyone. As you know, I'm a mixed co-host on the Mick and Mike Crypto Show. May have seen my face here before, but Bitcoin class of 2013. And yeah, it was my first foray, like many others, into the crypto space. I didn't jump right in, but a couple years later, started leading marketing teams in crypto. And more recently, we're on the managing partner at Deep Ventures, and we have made a few investments in the Bitcoin space, including Ordinalsbot, which talked about kind of really was a key player in igniting the whole Ordinals craze that Matt talked about. A Bitflow Finance, as well as Torum. And I definitely want to hear both sides of this, because obviously we are supporters of the Bitcoin ecosystem, but certainly understand the other side of it being the hardest money around, this pristine asset. Super excited to hear your guys' takes on it.
Yeah, and I will say that Vijay, that you are outnumbered, but not from the angle that you're thinking about. Not from the angle that you're thinking about. It's actually all three of our names start with the letter M. That's the only thing. that's the only commonality there. But this is a good opportunity for us to, start a conversation. Where do we all agree when it comes to Bitcoin? Like, what is it that we feel Bitcoin up to this point has gotten right? Not necessarily where it's going, right? Vijay, I'll start with you.
What has Bitcoin gotten right?
Yes.
I would say it's going according to plan, really. I mean, it's a process, it's a slow process of monetization. I like the way my namesake Vijay Boyapati described it in the bullish case for Bitcoin, which you might have read. But he talks about the adoption process where, a new money, a new commodity goes through these different phases. Starts off as a collectible where people just kind of, just collect it or whatever. It's kind of interesting. And then you move into the store of value because people see it's scarce and it's going to retain its value or appreciate over time. Once it's fully, established itself as a store of value, then you move into medium of exchange. And then when you're fully established in the medium of exchange, that's when you move into kind of unit of account, which is how you just kind of think about stuff in Bitcoin terms. So we're in the very early stages of store of value. And it's cool that it's kind of people at the Bitcoin conference are paying in with Lightning and so on. But I'm not surprised that we're not, paying in Bitcoin like on a day-to-day basis, right? I think this is a natural progression of things. It's a natural adoption process. And so yeah, I think it's going according to plan. It's going as per schedule. I'm not concerned about one thing or another. Yeah.
So if we're talking about, I think, what Bitcoin got right, or what we could agree on as the core truths of Bitcoin, I think number one, it got its monetary principles right. Bitcoin enshrined hard money into code, essentially, with fixed supply, predictable issuance, and resistance to debasement. So it's the first digital asset to credibly enforce scarcity at scale, which is quite important. Number two, it credibly scaled through decentralization, right? Like Bitcoin's network has proven itself to be resilient and censorship resistant and politically neutral for almost 15 years now. And no protocol has achieved the same level of global trust without needing central leadership, essentially. Brand and mimetic appeal. Obviously, you have like Bitcoin is analogous to this digital freedom movement. You see these Coinbase ads right now, which are kind of cheeky, that really fix the money, fix the system. It's kind of mimetic in a sense, so I think it's really, Bitcoin has transcended to this level of social, political, and economic idea. And then the lindiness, and the level of adoption that's really happened over the last decade, where we've achieved this critical mass of adoption as a global reserve asset held by institutions, sovereign entities, and millions of individuals. So Bitcoin has survived multiple cycles and just continues to lead trust and liquidity in that department. So I think that all of those dynamics kind of are what Bitcoin ultimately got right.
I agree with everything that Matt and Vijay said, and I think also it just sparked this global ability to kind of espouse these values of decentralization and build around that and innovate around that. And because I think a lot of times we people across the world, like, we saw these problems that centralization caused, but we really never were able to do anything about it. And or maybe it was just like, all right, we cared a lot about it, kind of on a theoretical level, but we're never really able to build things or solve those problems. And I think the advent of Bitcoin, it was, directly solved, a lot of these monetary problems around the world due to centralization, and but also sparked this whole kind of entire industry of building products with the similar ethos of decentralization, transparency, and access. So I think I would just add that on top of that.
Maybe one more sort of comment. Yeah, I mean, I completely agree with that, Mike, and I kind of lived that process. So as I mentioned, I was around in 2008, and post that, I actually became a big gold bug, and I invested in gold in 2008, 2009. I saw John Paulson, sort of score big, and it kind of made a lot of sense. But as you might know from looking at gold prices, that was the worst decade. No, it wasn't the worst, but it just stayed flat or down, right? Versus S&P and so on. And it was very frustrating because the reason I went into gold was because I witnessed the system. I witnessed the moral hazard. I witnessed the problems with quantitative easing and central banking and misaligned, incentives and centrally planned monetary policy, right? It was abundantly clear, but there wasn't an option. So for me, it was just kind of discovering Bitcoin and understanding the technology side. And so from that point, the moment I understood it was scarce, absolutely scarce and indestructible, then the leap from gold to digital gold was very, very easy. But yeah, it is the only solution, and it's you have to be ready for that solution. Kind of, I think you need to arrive at a place. Many people just aren't ready yet somehow. But if you are, then and you're searching for it, then it's a much easier kind of job.
Yeah, I think just going back to that, I think when you say a lot of people aren't ready for that solution, I think you're just seeing a lot of people who are in mature markets with strong financial rails, who don't don't find themselves in the position like people in emerging markets do, where crypto truly solves a lot of the high inflation problems that they have, the decentralization and the gatekeeping that happens more in emerging markets than in the mature markets that most of us live in.
I had a slightly different catharsis or aha moment when I saw something similar in the uncensorable nature of Bitcoin, but it was more through the lens of fraternity guys buying illicit things on the Silk Road with their Bitcoin, because for me it was like, that's interesting, because it's not something that I probably would buy with my PayPal address or something like that. And even at that point, I'm sorry, not Venmo, but Zelle hadn't existed. So like there was no way to actually exchange money with people. So that was interesting, but yeah, much different than the TradFi kind of moment that you had.
Something that was a really big takeaway for me talking to Vijay in the previous episode was about this analogy of Bitcoin being the wheel, not the vehicle. Vijay, obviously, I can't do justice to that analogy. Can you expand a little bit on what that means? And
yeah,
it's part of your belief.
When I was thinking about it, I just sort of, if you take the universe of inventions, I think that there's broadly two types of inventions. There's what I call foundational inventions. Those are inventions that are complete and timeless from the moment of inception. So the wheel is an example of that. It is, the same thing that a caveman used to draw out the carcass of whatever, a bison or something. It's exactly the same principle that you see, Tesla or whatever, sort of driving around with, right? I mean, you can use different materials, but the principle of the wheel is the same and it's timeless. You take a magnetic compass. It was also complete and timeless. It's the same principle that's used today. You take a nail, right? The nail itself was one of, humanity's greatest inventions, probably in Egypt 5,000-6,000 years ago. That as well is timeless and complete, right? It's the same principle that we use today. And then you look at other inventions. You take the automobile. Carl Benz came up with a prototype of an automobile, and then Ford came along, created the assembly line. You have all sorts of iterations today. You have driverless cars and EVs and all of that. It is constantly evolving. So that really wasn't a foundational invention. It's no less of an invention, but it wasn't that category of invention. It's something that keeps evolving. And similarly, social media or smartphones, computers, or the light bulb, like these things constantly change and evolve over time. So my point there was that the invention of digital scarcity was a one-time invention, and it was complete and timeless at the time of, when Satoshi released it, the incentive structure. And then as it has kind of built on that over time, it's just got stronger and stronger. You can make incremental, you can do L2s, you can use it for different purposes. You can, make it more programmable, Taproot and, op return and so on and so forth. But the foundational aspect of it, which is what gives it value, is scarcity, 21 million, and that whole incentive structure around how that is, preserved is the core invention. And that is kind of, in my view, a foundational invention, like the wheel, not the automobile. And where I was going with that was to say that, I don't know about you guys, but I've always been a big critic of this view that you can take the technology, you take this blockchain technology, you take it out and then you roll it out in 1,000 different other ways and you just create different Bitcoins or whatever. Like, that to me is nonsensical. I mean, there's utility, you can use it for different purposes, and maybe it disrupts other things. Like, maybe I think if anything, it's a threat to technology, to the technology industry. Although I'm not really seeing any evidence of that. I don't see Facebook really, concerned about some decentralized protocols. I don't, but in terms of disrupting the monetary system, disrupting central banking, monetary policy, they're completely different things. And so where I was going with that wheel and, the foundation invention thing was that when you're talking about money, if you're talking about something that's truly digitally scarce and the future money of the world, potentially the future reserve asset, that was a one-time invention. And if you think about it as something that you can constantly evolve and change, then you go down this path of, I'm going to create the next Bitcoin, a faster, more scalable, whatever, blah, 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 Bitcoin. And you go, and I feel like that is the wrong path you take it down, because you think that this is something that is going to keep evolving just by removing the technology from Bitcoin. Anyway, so that was my point. I don't know. Different people might disagree with that or whatever.
That's why we're having this conversation.
Sure.
I mean, Matt, what's your take on Vijay's perspective?
No, I mean, I tend to agree with the comparison of the wheel. I'd like to unpack that a little bit further and maybe I'll offer a slightly different perspective, because the wheel, at the end of the day, it's obviously, like you said, the most critical innovation that changed everything, right? It's simple, elegant, resilient, as all foundational inventions are. But by itself, the wheel doesn't go anywhere, right? It needs to be integrated into a vehicle or a broader system to create its functional utility. So the vehicle in this particular case of Bitcoin represents applications, financial systems, tools that move it further beyond just a passive store of value. And we can create lending and payments and marketplaces and governance and all different types of things that require a little bit more things built around it, infrastructure. That's one of the things that we're building at Arch. So without a vehicle, the wheel's potential kind of remains underutilized to a certain degree. But I completely take your point, Vijay, where you don't want to change the invention of the wheel, right? There's only one way to make a wheel, and you don't want to change that for the sake of just changing it, right? So I don't necessarily agree with the idea of changing Bitcoin just to accommodate this programmability or this future need, right? So you have all these soft fork proposals for Bitcoin like OpCat, OpCTV, things of that nature, which make an effort to try to turn Bitcoin into a more programmable chain or do more things like data concatenation and things of that nature. But that's a risk. That's a risk to the wheel invention, right? Because Bitcoin is safe and secure today in its current form and doesn't necessarily need to plug programmability into Bitcoin itself. We can build infrastructure around it, just like we did with gold, right? Gold was clunky, heavy, not easy to transact on an international trade basis. So we had to build systems around it. That's kind of how fiat currency became developed as a simpler medium of exchange for gold-backed currency. And then that turned into digital banking and all that stuff. So that was the story of infrastructure to work around the asset itself. And somewhere along the lines, we kind of screwed up our own money, which is a topic for another conversation or a different day. But Bitcoin is perfect form of money that cannot be tainted by any government source, by inflating supply or anything like that. So like we have this new untaintable asset like digital gold, but we do need that infrastructure for it to really scale its utilization and utility as a global currency.
I got a follow-up question to your.
I'll let Mike comment first. Sorry, I said I have a little observation, but I'll let Mike go first.
No, so I was going to ask, like, Vijay, you talked about the natural progression of Bitcoin. You know, it's going through its store value phase, medium of exchange, and then unit of account, kind of those three pillars of money, the definition of money. Like, do you think that all the developer activity happening on Bitcoin will slow down that process, or how do you see that impacting that evolution of Bitcoin through those phases?
I don't think it negatively impacts it in any way, and I think it's all net positive. I mean, one reason that immediately comes to mind is the long-term security budget, right? I mean,
Yes.
we need utilization of the block to push fees up. I mean, that's just a necessary component of Bitcoin, and it's needed for survival. So I have no issue with that at all. And to Matt's point about the soft forks and the OP-CAD and op return and all these things, I have no problem with that either, actually, as long as they're soft forks. And again, if any of these things actually threaten Bitcoin, then Bitcoin has anyway failed. It's like, it's kind of like if it was so easy to destroy or disrupt Bitcoin's progression by just proposing some kind of programmability through a soft fork, then it wasn't going to succeed in any event. So it's like, so yeah, I mean, I'm okay with that as long as it's a soft fork. And we're seeing some very interesting developments recently, right? Like with Bitcoin Knots and Core, and the migration of nodes away from Core to Knots to Bitcoin Knots over the last few weeks, I think, right? It's gone from like 96% dominance to something like 87% at the moment, and it's actually continuing to fall because they, I think, just went ahead and implemented op return, even though there was like some significant disagreement over it in the community. Yeah, I mean, that's the free market, speaking, right? And like I said, as long as it's a soft fork, I have no problems with that. It's backwards compatible, so fine. Go ahead. If you find enough nodes to adopt it, enough economic nodes, that is, that's fine. That's the market speaks, right? It's not a few people deciding; it's the entire market speaking.
No, I totally agree. And I mean, especially the point about the fee market needs to continue to increase over time, because I think today block rewards are about 350K or so. In Bitcoin, in less than 3 years, it's going to be cut in half and continue to be cut in half until it reaches its sort of that terminal decay rate or whatever, and then it becomes pretty insignificant. But without there being actual truly scalable on-chain demand and mempool block space demand, that really screws up Bitcoin's long-term sustainability and an ability to scale its security budget. When the more Bitcoin that we take off chain into cold storage, or putting them into these ETFs that remain underutilized and not transacting in the mempool, that ultimately is a risk to Bitcoin. And we need to be doing more things at the base layer, making more demand for block space, by creating more innovations and hacking around Bitcoin architecture. Like the spiking of the mempool of 2023 really was a result of just that, hacking around Bitcoin's core architecture, which was the advent of ordinals, as Mike mentioned, with Ordinals Bot and a few other platforms that certainly crushed it that year. There's a huge demand in the space for art on Bitcoin, fungible tokens on Bitcoin, and some of these more meta protocols that drive demand for block space at the base layer, that don't take Bitcoin off of Bitcoin and more into Ethereum or off chain into more centralized custodians, for example. So I think we definitely need to do more with what we have at the base layer and just kind of do more hacking around Bitcoin using Taproot instead of legacy scripts.
I have a question about the security. Bitcoin is the most secure network, hands down. But when you start adding different layers to it, for instance, my day job is I work for a cybersecurity company, and the Bitcoin ecosystem is an area where a lot of our engineers are spending a lot of time on, because now you have ordinals and you have introduction of BRC20. So my question is, how can we ensure that remains as secure as the actual Bitcoin network itself?
when you start to introduce these new functions and features to Bitcoin with these other layers, you're obviously taking Bitcoin security a little bit out of it. These applications and infrastructure providers do their best to meet users where they are on the trust spectrum, which I think is the point. For some, apps, they want to prioritize trustlessness, so you have to sacrifice a little bit on user experience and speed, obviously, because that's just a Bitcoin limitation. But for some applications like a perps DEX or something that requires a little bit more throughput and performance, you have to ask your users to give up a little bit more trust. But in order to serve users with Bitcoin and meet them where they are on the trust spectrum, we have to build out that infrastructure, the smart contracts and apps, stable coins, all these things that we saw, come to ultimately maturity in the Ethereum ecosystem from 2017 all the way to 2020. And that's, again, just the improvement of developer tooling, infrastructure, open source builders that become more and more familiar with Solidity, and that became their network effect. So to create the scalable trust, we have to actually continue to develop the infrastructure that is going to be supporting these types of applications, all the way to the moment where it becomes finally mature, like that 2020 DeFi summer, which certainly is coming in the Bitcoin space right now. The Ordinal Bot guys are building out a marketplace and an AMM called Trio. This is their attempt at trying to capture a lot of the fungible and non-fungible marketplace trading that's happening on Bitcoin. That's just one of many, many, many examples of builders who are, trying to skate to where the puck is going right now and be early to this new evolution of building on Bitcoin.
By building all this stuff on top of Bitcoin, you're not necessarily impacting the security of Bitcoin, the base layer, but you're increasing kind of the attack vectors on by association, on the Bitcoin ecosystem as a whole, at least to the kind of people on the outside who are just just watching from the outside, right? Like, do you see that as something that is a risk that might be detrimental to overall the what can be seen as kind of the security of Bitcoin itself? Not from a technical level, but more from like a narrative level.
And I think it can potentially hurt in a similar type of way that I think there's like a identity or narrative crisis in the Solana ecosystem where it's sort of being seen as extractive and no one's really making money.
That's right.
I guess the point that I didn't really round out in the last statement that I made was like, this is growing pains of any blockchain, right? Like back in the Ethereum days, people clicked wallet drainers and exploits and fell for phishing links and minted fake, NFT pages on accident because they found their way on the wrong site or something like that. Like these are all bad things for growth, but at the same time, it's part of the growing pains that people experience when they start to deal with new technologies. So I think that there are some bad actors in the Bitcoin design space, just like there are bad actors in every other crypto ecosystem, and that are trying to do extractive behaviors and or borderline scams. Like there are some some guys out there that are trying to like steal your money, right? And at the end of the day, we need to do our best with providing good audit frameworks, having a good security research community that is going to be doing bug bounty programs and stuff. We have to do all the things the right way instead of just trying to just throw some degen stuff up there and just say, hey, there's $2 trillion worth of Bitcoin that we can tap into. Just follow me, which I think was a lot of like the 2023 venture market. There was over $100 million poured in from the venture community, as you probably know. And most of those funded teams are probably not working on the same thing that they were pitching back then. So I think that just another calling card of a growing ecosystem. You have your grifts, you have your innovators, you have a little bit of everything, but hopefully the cream rises to the top and the good protocols with good sustainable sources of yield and the good user experiences that are, of course, safe, they will start to get traction. And I know those teams are out there, and if they're not, they're going to start to see the the opportunity and the handwriting on the wall to come in and build in the Bitcoin ecosystem. So we're hopefully going to continue to attract those types of builders.
I mean, in terms of your original question about security, I don't really think, because I mean, it's all cryptography. So if you mean by security, is my Bitcoin going to get stolen somehow, hacked or something because of all these things that are being built on it? I don't think so, and nothing that it can be done or is being done in any of these spaces is going to impact security from that. It's pure cryptography. It's public-private key, cryptography. But where it becomes so Bitcoin is essentially a system of incentives. It's multiple people operating in a decentralized manner, driven by self-interest incentives, right? And that's what somehow magically just comes together, and this thing just works. That's why it is truly magical, right? So where I start, I might, the only thing that would start worrying me is where those incentives start getting skewed somehow. So for example, and again, I don't really think it comes to the kind of my coins are going to get stolen type of security, but for example, there's, minor MEV, minor extractable value, which is, where I don't know, you have like, you start transacting, people start, sending NFTs or some sort of inscription or something, which is worth millions of dollars, and so the fees attached to that may be higher. And so you have miners. I mean, so it could impact the censorship resistance of the network. So as miners are able to spot those particular transactions and fill an entire block, with that particular single transaction. And so it crowds out other, economic transactions. Then there's potentially censorship resistance that's being messed with, permissionlessness that is being, messed around with. So it's those types of things that maybe start bothering me. I don't think, I'm not sufficiently technical, but my understanding is that MEV doesn't really, it's not an issue with Bitcoin like it is for Ethereum. And there are things that you can do to obfuscate the types of transactions. So miners don't really know, what is what. But again, there could be workarounds there where you send, transactions directly to a miner rather than through the mempool and so on. But yeah, those are the things. So I agree there are risks, but not in the way that you might be thinking about it, Mikhail, like kind of security, but more kind of just messing with, the way it's supposed to work.
Yeah, that's what I was more interpreting his question as, is like when you put this augmented reality glasses on and you see the rest of this Bitcoin DeFi space open up, you're not necessarily worried about, am I going to get my Bitcoin keys hacked? Unless you, of course, put it into a bridge and you give those keys up. So like when you put those goggles on and you say, I'm going to go play with an AMM, or I'm going to go play with the marketplace, at the end of the day, there needs to be some smart contract security there. Otherwise, that's the risk. The risk isn't that you're going to, sign away your keys on accident or something like that. It's more or less just exploit risk when you start to play around with these new types of applications that quite frankly are, they're complicated. When you start to take the account model and try to put it together with the UTXO model and you start to do more scalable applications, that's when you start to hit the limits of, okay, things don't exactly match up. And that's why the EVM and the SVM don't really work for Bitcoin, because you have this element of global and independent state that are not really compatible. You have UTXO and account model that's not really compatible. And of course, the EVM is just totally unaware of what's happening in the Bitcoin mempool. So when you start to put all these pieces together that aren't meant to, you're kind of shoving a square peg in a round hole. And that's where the risk is. It's not, and the Bitcoin is ever going to be at risk unless you choose to give it up, of course. By the way, Vijay, I'm assuming you're not a big fan of RBF.
I don't have a strong view on it, but I don't think it's necessarily harmful. But maybe I don't know enough about it.
Well, that was just what you were just referencing about being able to, bribe miners to take a specific transaction, or you could even cancel your own transaction by bribing the miners more fees to take this second transaction.
Yeah, just the ability to raise fees like on the fly is kind of RBF, right? I think you need that. That's really important, rather than having to cancel the transaction, right? You should be able to. I think that flexibility is important. But
yeah, mempool's doing some acceleration type stuff, but RBF is like wreaking havoc in the mempool right now.
But again, you can't stop that though, right? I mean, that's the thing. I don't think you can really curtail that. If it happens, it happens. I mean, and I think people sending transactions, I mean, like, why is it so important that transactions go into the mempool? I mean, the main argument is fee estimation. But then I think many people disagree. They think that though it's not even, necessarily accurate reflection of fees at any point in time. So, I mean, yeah, I feel like it's going to happen anyway. I don't think there's a way to stop that. It's just kind of a necessary way of how miners work in a decentralized way, and users can send it wherever they want. That's just my view. like there's all these people sitting in a corner of the internet on Twitter screaming about what Bitcoin should be, all these cypherpunk ideologies. It's nobody cares. Okay. I mean, we're just kind of this kind of circle jerk sort of thing where it doesn't matter, right? Bitcoin is going to be adopted through a free market, how in its own drumbeat, right? In its own way, and nothing we say or scream at each other about is going to change that. Were corporates going to adopt Bitcoin? Of course they were going to adopt Bitcoin, right? Were sovereign wealth funds going to adopt Bitcoin? Of course they were going to adopt Bitcoin, right? It wasn't going to be like, if you wanted it, if you're upset about that and you think it should be just some preserve of a bunch of cypherpunks, coders and the shadowy super coders, like it's not, then that means it's failed, right? For it to go mainstream, of course, it's going to have to work with the existing legacy system, which is corporates, it's funds, it's sovereign wealth funds, it's governments and all of that, right? So in many ways, you can look at it as a Trojan horse, right? It's kind of going in, it's getting people economically incentivized to support it and preserve it and not attack it. And then you learn more about it, and sure, maybe some of those people will move out of their Bitcoin ETFs or move out of MSTR and just buy cold storage Bitcoin. But they would have benefited from the price appreciation along the way. So I have no problem with people if they're I'm much happier if people bought IBIT, the BlackRock ETF, or even MSTR, rather than just be complete no coiners and just invest in the S&P 500 and US Treasuries, right? So to me, it was always obvious that this was going to happen. It's inevitable. Nothing you or I or we say on this podcast or anywhere on Twitter or whatever is going to have any impact on that, right? So yeah, I think it's just natural, and I'm happy for it. I mean, people will get burned. I think a lot of the companies that are going, I think MSTR will succeed, but a lot of the other companies with like $10 million of revenue trying to buy $500 million in Bitcoin, that's not going to end well, right? So as with, it's just human psychology. There's always booms and busts, right? People will always, it's a pendulum. You swing from one extreme to another. So they're going to overdo it, and few things are going to blow up, and a lot of people are going to get burned, and then we swing back, and then it's just kind of how it works. And so we have to, I think we're in the early stages of that big swing. And of course, it's going to a lot of it is going to blow up at the end of this, corporate Bitcoin treasury adoption cycle.
Again, do you see like that being collateral damage to Bitcoin? Similar to the question I talked about, the security is not really the security of the chain, but it is, it's kind of tangential, but may have an impact on Bitcoin, the asset, and how it's viewed by the institutions and the governments. If things like that, if some kind of bubble pops, what do you see as a potential fallout from that?
Again, I mean, it's like, sort of with Bitcoin, it goes, it was at $3,000, it went to $69,000, then it fell $15,000 with FTX and all of that, and then it's gone to 100,000. So it kind of that's how it works, right? But then you look at the average, you look at the 200-week moving average, right? It's a 45-degree growth. So yeah, I mean, I think it'll go to maybe, I don't know, 500,000, wherever it ends up with at the end of this particular, corporate adoption kind of phase. But then maybe it falls to 200 or 300 or something, right? Or something like that. Still high. It's not going to go down to 15,000 again. So yeah, I think that's just kind of progression. It's just how it works.
Yeah, Mike, I think people will get, in a similar type of fashion as you mentioned with the security exploits, they will get wrecked when people start to just mid-curve certain things. And that's what happens. You see this through all different types of sectors. You saw this in 2017, 2018 with cannabis stocks, when there was just an insatiable demand for public market cannabis stocks. That doesn't mean that the entire cannabis sector was a fugazi or built on a house of cards. It just meant that the majority of the ones that were taking advantage of that interest in the public markets were. So I think these Nakamoto 21 and MicroStrategy type of public plays are certainly in vogue right now. But at the end of the day, like MicroStrategy is like a sophisticated ohm that buys Bitcoin. You know, if you remember ohm from 2020, it literally is a Ponzi scheme and requires more people to buy the bonds in order, like, so that they can keep, you know, pumping the returns and stuff. But it solely requires Bitcoin to keep going up, or at the very least staying sideways before it kind of falls down. So the over financialization of Bitcoin kind of bothers me a little bit.
Yeah.
But that being said, you know, I do think that there's a place for TradFi in Bitcoin. There's a place for DeFi in Bitcoin. You know, gold didn't dominate because it sat in vaults. It fueled international trade. It was lent. It was rehypothecated and collateralized. So in the same way, Bitcoin as pristine collateral needs active capital markets, both in TradFi and in DeFi, to fulfill that same trajectory. You know, so I do think that it's going to be pretty interesting to see some of these more financial products that are built around Bitcoin, you know, whether it's meant for, you know, Fortune 500 companies to properly leverage the Bitcoin on their balance sheet to use for things like factoring or cash flow management. I think that's a, you know, phenomenal use case for it. But going back to the point about like creating more like demand for block space, if we can't build this parallel financial infrastructure that's comparable to Ethereum, then ETH is just going to absorb all the capital market activity for even Bitcoin itself, which is not going to drive any demand for block space or do anything for the fee market on Bitcoin. It's just going to help Ethereum, right? So today, you know, there's more Bitcoin that's wrapped on Ethereum that's used in Lightning and other Bitcoin native protocols. You know, so if Bitcoin is destined to be money, it also needs markets, it needs credit, it needs yield, it needs leverage, just like ETH has Maker, Aave, Lido, you know, all these other protocols. That's what allowed ETH to kind of scale as a DeFi infrastructure. It's just unfortunate that ETH is kind of just down only and it has really no utility, and it's got a lot of fee leakage, which Bitcoin doesn't have. So it's even more reason to build this financial infrastructure around it.
Yeah, 100%. So Vijay, do you agree that Bitcoin should be a productive asset, specifically in DeFi? Like, would you have anything against that? I mean, you know, we're talking about all the kind of the TradFi things, but, you know, a lot of stuff that will be built on Arch Network, on what Matt's building, will be decentralized finance and using Bitcoin, like you said, as collateral. You know, we've got 2 trillion of Bitcoin. Do you think that's a kind of a noble? Okay.
Yeah, absolutely. I'm all for Bitcoin DeFi. I've always been all for Bitcoin DeFi. I'm not for Ethereum DeFi. Or Cardano DeFi. Yeah. I mean, it's not even it's not, the D is a misnomer. It's not decentralized. But anyway, I think it's only true DeFi if you do it on Bitcoin. That's, you know, kind of, so I've always been a big supporter of that. Yeah.
But is it, so you're saying that just because it's on the Bitcoin network, that will make anything that you're building on top that much more decentralized? Is that correct? Like, would it naturally be more decentralized than, like you said, Cardano, which is their whole thing?
So I'm a big, I'm a big, you know, kind of, what matters to me most is Bitcoin, the monetary asset, right? So, but as Matt mentioned, that monetary asset needs to be used. I mean, yeah, I love the analogy of the wheel, plus you need the vehicle to drive it around, right? Otherwise it's just going to sit there. Yeah, as long as, again, coming back to our prior conversation, as long as you're not messing somehow with incentives that screw with the money, the monetary properties of Bitcoin, everything else is necessary. It's really, it's needed. The original purpose of Bitcoin was not to disrupt like MasterCard and Visa. I think maybe you took away from that I don't care about the payment rails component. I don't know if that's kind of the origin of your, but that's not what I'm saying at all. I mean, all I'm saying is that I don't believe that was the core purpose of Bitcoin. I think Satoshi's core purpose was to create digital gold. I think that's clear from like all the references to Order 6102 within the Bitcoin protocol, right? Satoshi's birthday is April 5th, which is the day of Order 6102. The difficulty adjustment resets every 16 blocks, which is 6102 in reverse, right? He was thinking about gold. He was thinking about confiscation. He wanted to create an unconfiscatable digital gold, right? And he wasn't thinking about, how can I pay for my coffee faster, or, that was not what he was thinking about. So I'm just, all I'm saying is that, like, some people have it, kind of the cart before the horse kind of thing. They're thinking about payments first, and cash, e-cash, and then everything else is secondary. But what I'm saying is that I don't think that was what Satoshi wanted. The original objective was to create a scarce digital commodity that disrupts centralized monetary policy. And that's digital gold. You wanted to create that. That's the core innovation. This 21 million digital scarcity is the core innovation. The second order is, how do you transact? I mean, why is it better than gold, physical gold? It's because it's transactable, because you can make payments with it, right? That's what makes it better than physical gold. That's why it's digital gold. And so it is absolutely critical, really important that you can make payments with it. And all the layer twos and all the other things that are being built on it are super important. But to me, they are important, but a second order priority from the first order priority, which is absolute scarcity, digital scarcity.
Not you specifically, Vijay, but in general, like when you talk to maxis, and Matt, maybe you come across plenty of them, at conferences, and trying to explain what you're building. Like, what is the biggest pushback that a lot of the quote unquote maxis have around building on top of Bitcoin?
I think a lot of what they say is what Vijay is saying today. They don't want you to mess around with the underlying incentive structure of what makes Bitcoin great. Where you have this not deterministic, but just this this mempool war based on fee rate, and it's an open market, right? That's what's beautiful about it. There's no centralization risk among the nodes or anything like that. So changing that would be tragic at the end of the day. So but at the same time, like what Vijay also said, any monetary asset requires financialization for it to kind of scale, right? So the idea that Bitcoin doesn't need DeFi misunderstands how value accrues to a monetary asset. I think that's what's missing in a lot of ways from Bitcoin maxis. And keep in mind, most Bitcoin maxis are totally unexposed to normal DeFi activity on Ethereum, Solana, et cetera. They're kind of just like all about their keys, and that's it. Cold storage keys, stack sats, and that's all. So they have a very little context as to what the actual utility of DeFi is. But with Bitcoin, it's got this fixed supply force, which it forces financial innovation at the end of the day, right? Because you can't print more. So how do you optimize allocation and scale? So that means you have to create capital efficiency, risk transfer, lending, and all this stuff. That becomes critical. But that is what DeFi is at the end of the day. DeFi is creating new assets and moving them around, and having the ability to, enforce the rules of the smart contract and let people make trades and do those types of things. But Bitcoiners aren't aware of what that really means until we show them. We just saw for the first time Bitcoin staking yield through Babylon, right? Which was a first of its kind concept where you can technically use this trustless infrastructure on Bitcoin and get staking yield, which is oh wow, passive yield on my Bitcoin sounds great. It was very black box and abstract, as to what that rate would be. But there was a tremendous demand. There's over $6 billion worth of Bitcoin staked into Babylon during its couple different supply cap seasons that they did. So I think that goes to show you there is demand for putting your Bitcoin to work and getting yield for it. It's just there's a fundamental misunderstanding of how we actually get that yield. And Mikhail, you were asking, why isn't DeFi actual DeFi? The reason is because every single pool of assets that you trade on Ethereum, you don't need Bitcoin to trade those things. You don't need it for arbitrage. You don't need it to capitalize on liquidation events. You need ETH, or you need stable coins at best, right? So that's why the yield for Bitcoin on Aave is 0.3% APY, because there actual is no use for Bitcoin in Ethereum. You can use it to borrow against, but you can't actually get yield for it unless it's some inflationary Ponzi economic, token emissions from some protocol or something like that. That's your yield, But for there to be actually truly sustainable yield denominated in Bitcoin, we need to have a DeFi ecosystem that is truly denominated in Bitcoin. All of the token pairs are in Bitcoin. All of the loans that are issued are in Bitcoin. So that's what actually creates the yield source, because you have borrowers who are willing to pay for that Bitcoin, and then they are going and capitalizing on trades and arbitrage and liquidations like they do in other ecosystems. So that's what the opportunity is here to shine a light on sustainable yield and in the absence of actually truly sustainable yield. You can go on Berachain with your wrapped Bitcoin today and get an enormous amount of exotic tokens that you're going to end up probably dumping, and that's your yield. But that's not true DeFi for Bitcoin. That's going to drive yield for Bitcoin. So I think that's the exciting part about the next cycle, or possibly 2 cycles, is going to be.
Yeah, I just wanted to say one thing in defense of I don't know if I'm which category I fall into, but the Bitcoin maximalist sort of common toxic Bitcoin maximalists. I think I don't know if I don't think I am, but I think they serve an incredibly important purpose within the ecosystem, because they are the immune system, right? I mean, you need that. They are the opposite. They are the balancing force. Like, I want my money to be boring. I don't want Bitcoin to be punk again, fun again, and all these things. I mean, I like, DeFi, but I'm not interested in those things. I want my money to be secure, transactable, censorship resistant, permissionless, all those properties. I want it to be boring, right? And these guys are the guardians of those kind of core principles. I think they are extremely valuable in the ecosystem, and I think the reason why Ethereum and Cardano and all these other ones have largely failed, frankly, if you look at Ethereum over the last year, ever since they adopted proof of stake, is because they've just not had that kind of maximalist attitude of we're not going to compromise, we're not going to trust anyone, we're completely trust, don't trust, verify type of attitude, right? And really toxic about it. So I love that. I absolutely love that. I just wanted to say that.
I mean, you could have a whole other conversation, many hours, on whether Ethereum failed or not, right? But that is one of the that is one of the things that I think is so interesting about the Bitcoin ecosystem, and I love, is that when you look at other kind of cultures of other ecosystems, they're all kind of pretty similar, right? They all kind of have, they all just pretty much kind of a lot of times on the large part agree about a similar direction or a similar culture. But in Bitcoin, you've got this spectrum. You've got this, like you said, the immune system, the maxis, and then you've got the people who are, absolutely degenning on the other side. And then you've got that middle where real things are being built, and there's this whole spectrum of how much risk they're willing to take, this kind of trust spectrum. So that's one of the things that I really appreciate, and I appreciate the that comment about the degens and the maxis, and just it's just in such an interesting spectrum in terms of culture and thought process within a single.
Right. It's the diversity, and I think the diversity has a lot of value. Yeah. It's representative of the real world as well.
I totally agree, guys. And just last point, Michael, before you turn us off, the beauty is also in its disadvantage, right? There is no foundation that can help give grants to builders or teams or infrastructure providers that we know that we need. So it falls on the VCs like you, Mike, and builders like what we're doing, and the guys at Trio and Ordinals Bot to actually just go out and build for some future, right? There is no Ethereum Foundation that's giving $1 million grants to the Alchemies and Inferas because we know we need indexing and RPC support. Dev tooling is not going to make itself, so we got to build it. So that is sort of a disadvantage for the obvious advantage of having that diversity and that sort of immune system, as you called it, Vijay. I like that, to make things a little bit more predictable within the Bitcoin world. So just another note.
Well, I will say that I'm a little bit surprised by how agreeable we all are. And I think that just shows just the overall power of Bitcoin. And even though we may have slightly different perspectives on little minute things, ultimately it brings people together. And that, I think, just speaks to the power of Bitcoin, the asset itself. So on that note, I want to give you guys all a quick little plug, because Mike, you run a great newsletter on Deep Ventures. You talk about different startups that are securing some funding. Matt, you're building Arch Networks. So far, it's got a lot of great momentum, reputable backers. So follow Matt along for updates on that. And Vijay, you got a great book, Principles of Bitcoin. I feel like people should start learning about Bitcoin by reading your book, and then they can transition to what Matt is building on top of Bitcoin. And from there, they can learn about other tech narratives by tuning into Mike's newsletter. So great guests. I appreciate you all for hopping on. This was a great conversation. And if you guys enjoyed this video, please subscribe to the channel, like the video, and we'll catch you on the next one. Thanks, everyone.
Thanks, guys.
Thanks, guys. Great convo.